The reality is we had a silver breakout, but a couple days ago, it looks like the stocks, the miners, the juniors, they put in a short-term peak that's also reflected in gold's price action today. So a little bit of a mix. We're going to talk about it and what we can expect next week and beyond. Let's get to it. Okay, so starting off here, as we always do, this is our market overview. We have these beautiful 3 or 4 month candle charts with the moving averages here. What you'll see is the 50-day in blue, the 200-day in red, and then the 400-day moving average. Now, with respect to gold, gold is still in a consolidation / correction, because we can see here, there is resistance here, right here, right here. And then again, we came up here, and the last couple of days there we're selling at 3,400. Now, for me, I like this. This is a good thing. We're going to see gold continue to consolidate and correct. I think that's good. Puts it in position later on for an even bigger move higher. And we can see here gold against the stock market. Look what happened today. I mean, it did bounce here, but this is the 50-day moving average, a short-term indicator. Rallied here, rallied a bit, but it's still below the 50-day. So very short-term. This is evidence. Could be a little pressure on gold next week, excuse me. Now, on the other hand, silver finally broke above 35. Now, Greg Weldon mentioned 36.50 as a target. So today, you did have potentially a bearish candle today, so we'll have to keep that in mind. Now, even if silver reverses next week back below 35, you do have support here. Call it in the 33s, and very strong support here. Call it 32, 33. So if silver comes back, it invalidates the breakout next week. No biggie, medium term, nothing to worry about. Now, here's GDX, GDXJ, SILJ. We can see, and I'll talk about this gap because I did put out a flash update a couple days ago for subscribers. Looks like this gap here is going to fill. Same thing here. This gap will fill. Couple gaps here in SILJ. This gap is going to fill. So, look, the last couple days, not a great candle. Yesterday in GDX, same thing for GDXJ, SILJ. Hard to see, but what happened is it went up, but then it lost the gains as it closed here, but earlier in the day it was way up here. So you had that. Then today you had a down day. So short term, the miners have hit a peak. And so we're probably going to see selling pressure on the sector over the next week or two. People, that's a good thing. It was getting way too overbought, and I'm going to get into that in a couple slides. Stock market, it's here. Nothing much to say. 10-year yield popped back up today. Here's TLT. I'm less focused on those things right now. Let's get to the daily candle charts. Gold and silver. Gold here, silver here, of course. Silver broke above 35 finally. And so you do have a potential, I did at some point have a chart where I was showing, you can see this better on a daily line chart, but it looks like kind of an ascending potential triangle. And so the breakout would measure potentially, I think it's about 42, 41, 42. So that is a potential target for silver. But still, I mentioned 35. I mentioned it's got to get through 37 too. Greg Weldon said 36.50. Look where it stopped, almost at 36.50. So we'll see. This can come back here, maybe even a little bit lower. Trade like this. Again, no biggie. Here's gold. This is what I sketched out last week, something like this. Looks like there's a chance it could come back and test this line below 3,200. Again, no biggie. This is something we've been expecting for weeks and weeks. And so, again, short term, trend is probably going to be lower in the sector. Now we can see here the weekly chart. Bearish candle for gold this week. Really bullish candle for silver, by the way. And you can see here, I mean, this consolidation, we talked about it. Again, whether you measure from 28 or 29, 34, projects to 41, potentially as high as 42. But again, we could see this correct and consolidate for a little while before trending higher. Here's the weekly line chart for silver. Again, we can see the price action. Beautiful breakout. So I think gold's going to continue to consolidate. It's probably going to pull silver in the short term into a little consolidation of its own, but silver is definitely stronger than gold at this point. Okay, and moving on, I do want to mention this. This is just another sample. I'm scratching my back here a little bit, but this is a flash update that I put out. I believe this is Wednesday morning, and I noticed the breadth indicators, at least the percentage here. You can see the percentage of GDXJ and Huey stocks above the 20-day and 50-day moving averages. The Huey stocks, it was above 100%, above both the 20-day and the 50-day. Now for GDXJ, both were at 96%. And people, what we have to understand is, at least my work and my research, regardless of what the medium term or larger term trend is, no matter how strong the market is, you get these figures right here, 100%, 96. That tells you the market's really overbought. And as I wrote here to subscribers, when these figures are that high, the sector almost always begins a short-term correction. So I mentioned the gaps that we had on Monday. Breadth data argues the gaps are going to fill, but I mentioned there's a possibility of breakaway gaps. So it's always important to look at both sides. But at the end of the day, I said, given where metals are near resistance and the breadth indicators, I predicted that we get a short-term dip and a fill of the gaps. And we'll probably correct more than 5% at this point. But, this isn't just to show you that I can call it. It's not about calling every short-term move of the market. It's just assessing where there's risk, where the market's overbought, where we need to step back, maybe trim a little bit. And look, when these numbers get more oversold and the market's at support, that's going to be time to buy and add to our positions. So would love to have you come aboard the Daily Gold Premium.